Welcome to the Millionaire Journey Podcast. The goal of this podcast is to guide and empower you on your journey towards financial independence. Here's your host, Glenn Yaney.
Today, my guest is Michael Pansolini with Archangel Asset Management and MHP Pros Mastermind. Welcome, Michael.
Thanks for having me, Glenn. I'm really excited to be here.
Yeah, I'm glad to have you. I feel like I joined your mastermind group or the MHP Pros probably 6 months ago, but you just opened up a school, account, and it feels like it's a lot easier to interact, and I've been super active, and that's where we met. And looking to hear your story.
Yeah, absolutely, Glenn. And thank you for joining. For those interested in investing in mobile home parks, you guys can find us on School. You can find us on our podcast, The 30-Day Mobile Home Park, where we kind of uncover some of the secrets of the industry and provide a lot of free educational content alongside a link to our mastermind group, which is 100% free as well. So join up. You'll see Glenn in there. You'll see me in there. And you'll also see my business partner, Ryan Naris, who's the owner of 85 mobile home parks. And I believe he was recently on the podcast with Glenn.
Yep. Cool. So let's hear your story.
Absolutely. So my story begins, when I was supposed to go to film school years ago, when I decided to instead pursue finance and accounting at Penn State and kind of killed my creative dream. And effectively, through that experience, what I learned was that you can never escape who you truly are. And so through the experience of getting my finance and accounting degree, becoming a corporate employee, and really diving into the world of private equity and real estate investment, I realized that regardless of all of that education I had in finance and accounting, I was truly passionate about creating things, whether that be in this case, or in the case of my high school career, being a videographer and someone who was extremely interested in film, versus kind of taking that creative mindset that I had and applying it towards building other things. So, I that piece of me went dormant, I want to call it, for years. And it was coming from a practical mindset. While I was in college, the pressure of parents, the pressure of, needing that steady income, it pushed me into a more practical path, which was finance and accounting. I think that when people hear that story, they can definitely they relate to it, right? But what I also want to touch upon there is that the 15 years that I spent studying those skills and learning that business put me in a position today where I'm able to utilize the creative side of who I am in a way that I wouldn't have been able to otherwise had I not gone through those 15 years of practical skills building. And so, for those of you who are like, yeah, I want to pursue my dream, I think that it's a very noble thing to do and something you should absolutely pursue. But I think skill building before you do that, and maybe within the confines and the protection of a W-2 job, is equally as important. And building those practical skills that can be applied in any business, finance and accounting being two really good examples of that, are super important in you potentially leaving a W-2 to start a business. And now you have an idea of what the levers of profitability are, and exactly how to build a business, to raise capital, understanding, what a balance sheet is, what an income statement is, and then being able to sell your idea to a group of investors. So, if there was anything that I'm glad that I did, despite not following my creative passion right off the bat, it was finance and accounting. I think if you're going to do something practical before you do something a little riskier and more exciting, I would say 100%, pursue the language of business. And that's what I did. So, I took you through the backstory of who I was, but, what actually practically happened was I left college, had got my CPA. I worked for a CPA firm. I always saw myself leaning towards the creative projects at work, those that were, involved in building something, whether it was a process or, just putting a group of people together to solve a problem. And I always saw myself leading those initiatives. So, I had an opportunity to leave and join as a process improvement specialist and consultant internally with Brookfield, which is one of the largest owners of real estate in the entire world through their private equity fund next to Blackstone.
Yeah.
And through that experience and in, doing the things I did best, which was process improvement and consulting on automating processes and building processes and slashing bottlenecks, I got to meet a lot of people in the front office. And for those of you unfamiliar with a private equity shop, a front office is, where the deals happen and how deals are made. And, I applied for a position there And I ended up joining as an associate in the mobile home park space. And so that's what brings me here today is my background in private equity related to mobile home parks.
Awesome. Yeah, I love it. And I always like relate to my own story when I hear other people's. And I think about, for me, it started with Red Lobster. I was a server at Red Lobster. And when I got my job with the institutional property manager, it was just, I think it was all the ass kicking that I got at Red Lobster
Yes.
that like taught me how to deal with customers, how to be in sales, because I was in a sales position with the property management company. And it's like, at the time I was doing this 7 years at Red Lobster, I thought it was a job that I was never going to leave. Like I wanted to leave, but I was like, I'm going to be here for the rest of my life. What am I doing with myself? And it was a thing that got me to the next level, and similar to what you were saying as well.
Yeah, there's always lessons we can take from our
Yeah.
previous jobs, whether we know it or not in the moment.
Yeah.
And a great example of that is now working as an entrepreneur. Um, I work with a lot of people who had never been in corporate, and the email etiquette isn't there, or like some of these soft skills that you learn in corporate,
Yeah.
it's just not quite there. And so it's funny to see, hey, that was actually a skill I built over the years, and I can craft a pretty good email now. And that's,
Yep.
Believe it or not, useful in many cases.
I remember the first email I've ever typed, I was like asking, how do I start this email? And I was like afraid to do that. I was afraid to pick up the phone, afraid to call anybody. It was just like, it had to all be learned.
Yeah, it's a skill in itself. And thankfully now, if you're not that great at it, you can utilize AI to help you. And I've actually helped some of my mentees craft a more professional image based on using AI, and it's still their thoughts, just is crafted in a professional email. I'm a big proponent of using tools and technology to make your skills even better. And I think, if you have some kind of fault, you can always make up for that now. It's the best time to be an entrepreneur, in my opinion.
Oh yeah, with Chat GPT and everything, it's just like you throw it in there and then just kind of move it around, or kind of give it the idea, and then it's an amazing thing.
Absolutely, yeah. I mean, just to give you a quick example, over the course of the last year, I've been building my real estate portfolio, and I've had a lot of mobile home parks under contract. And when you're just starting out, you want to minimize costs as much as possible.
Mhm.
And you need lawyers. Like, there's absolutely no doubt about it. And lawyers are expensive, but there's a portion of time between the LOI and the contract phase where if you have built out a pretty good contract, one that has been reviewed by a lawyer, and you want to tailor it to the next deal, with maybe in the
Yep.
same state,
Yep.
you can utilize ChatGPT to review the contract and say, hey, is there anything here that might differ for this specific deal that I hadn't thought about, or what are some risks that I'm not considering
I love that.
within this contract? And the amount of response that I've gotten, it's like a 3-page list from ChatGPT, which tells me exactly what the risks are and maybe how to mitigate them in the contract. And so maybe now I go to my lawyer and I say, hey, are these potential risks that we should mitigate in the contract? And I've just cut down his hours tenfold, because now he doesn't have to review it as thoroughly, potentially, right? So you should utilize these tools not necessarily as the end all be all, but as a sidekick, as your paralegal, let's call it. And you'll see the cost savings are there.
I did something similar to what you just said just recently with Grok, which is similar AI, Twitter. And what I did is I put my financial plan, and I really, with a financial plan, you're always afraid to like hand over everything, or you might be embarrassed by a few things in there. You're like, well, this is a little hairy. This is this. It's like, but the good thing about the Grok or Chat GPT is that you're like, look, this is just a computer. I'm just going to talk to it and just
Yeah.
feed it. Even the stuff that I'm a little worried about, I'll throw it in there, put all this stuff. And then I had like a full on hour conversation with Grok about my financial plan, about what I should do, or how it should be structured, or, going forward. And it was pretty impressive, like how it was like kind of, I said, just make sure you like poke holes, like pros and cons of all the things that I'm saying to you, and like really went into this plan. And it was a pretty interesting, I guess, exercise. So
Yeah, even if you use it as potentially a journaling device that can
yes.
talk back to you and give
Yeah.
you feedback on your own thoughts,
Yeah.
it is a fantastic way to expand your mind and think about things you may not have thought about in the first place. I know I have a friend who recently went through a divorce, and
Mhm.
he's utilizing ChatGPT. He says it's his therapist now. And I'm like, that is hilarious. What
Yeah.
a use for it. Like, he'll just talk to it.
Yep.
And I think Grok actually has a therapist setting. I was listening to
Oh, really?
Elon and Joe Rogan talk about that recently on the latest podcast that they did. But honestly, I'm really worried for humanity, but simultaneously excited.
I would say you just got to get ahead of it, is what I would say. And
Right.
Yeah. So let's talk about your. So you uh, started real estate investing. Like what's that look like?
Yeah. So again, like just to kind of give you some background on my role at Brookfield, I was a portfolio manager. I oversaw everything from acquisitions all the way through dispositions, inclusive of refis, and then all the operational pieces in between. That's what a portfolio manager does. Now, there are acquisitions teams at Brookfield as well that only focus on acquisitions. And for those of us in real estate, they understand how important that function is and how time consuming it is, from sourcing deals to getting the capital together, et cetera, et cetera. But because mobile home parks was such a small asset type within the larger Brookfield setting,
Yeah.
we were actually sort of our own acquisitions team. And so we got to really deeply review the deals from an acquisition standpoint and assist with the underwriting and diligence. And then from there, they would hand it off to us to be the asset managers, right, for the entirety of the project until we went to sell. And then obviously we'd refi somewhere in between if it was financially sound, utilizing the help of our capital markets team, another great team at Brookfield. And then we would then go and dispose of that asset, and it would be disposed of to potentially, more of a value add fund or a core plus fund that wanted, safer but lower returns. So maybe something between an 8 and a 12%. Versus us, we were looking for more of like that 18 to 22% return, what we called opportunistic.
Which you would
So
think
anyway,
that Brookfield would be
yeah,
like kind of like that 8 to 12% type buyer, but
yeah, and they are, and most of these private equity shops, they have those tiers of returns that they're looking for, and just like we as entrepreneurs, entrepreneurial real estate investors, when we go out to the marketplace and we look for investors, we ask the question, well, what are you looking for in an investment? Do you want this passive, cash flow that comes in every month, every quarter? Do you want something that appreciates and so that you can maybe double the invested capital? So are you more IRR and multiple on capital focused, or are you more cash on cash focused because you just want to see that income come in on a monthly basis? You have that same type of investor finding strategy. We have an investor relations team, right, who then goes out and sources the capital for those specific strategies. And so you have everything from the opportunistic side, where you have large institutional funds that are investing into Brookfield who want to see this major capital appreciation and are willing to take the risk for those types of investments, all the way down to what we call our core plus funds, or our publicly traded REITs in certain cases, that really spit off between 18 and 14%. So you have that whole spectrum. And one of the cool things about private equity is that's how deals kind of flow through pipelines. They start as these opportunistic deals. They become stabilized. They have high yields, high returns, because you're taking on all that risk to stabilize the asset. And then you can pass it along to maybe like one of these publicly traded REITs that has more stable returns and is interested in operating that sort of platform.
yeah. So I don't know how much you can talk about it, but with Brookfield, it was so when you have like an investor relations and in mobile home parks, it's not like there's an abundance of mobile home parks available to be purchased to get 18% upside, as in like at that level of Brookfield, I would imagine. Like when they have an investor relations, like how many investors do they? I feel like you call like a JP Morgan or something like that, and they'd be like, "We'll fund every deal that you have." So how many? Like, how does that work?
It's interesting because typically your investors invest into a fund. So the underlying assets within that fund may make up different sectors, and they're not super interested in a particular sector unless it's like the shiny object of the year, right? And
Yeah.
so every year we'll talk about the best performing assets in our fund, which span everything from commercial office all the way to alternatives like senior living facilities.
Yeah.
But based on what the shiny object is, if we're trying to bring in a newer investor, obviously we'll talk about our core assets like multifamily, right? We'll talk about that to them. But over here we have this shiny object, which is manufactured housing, as it's called in the private equity space.
Yeah.
And that has been performing extremely well over the last 2 years. And it's going to happen again, right? So these are the types of conversations that investor relations specialists have. And often these big institutions are not super concerned with the specific asset types, but rather, broadly how we're diversifying within that fund to create opportunistic returns. And typically, there will be an annual meeting where we talk about, hey, these 3 sectors performed extremely well, and then maybe talk about the 2 that underperformed for the year and why.
Hey guys, if you want to learn more about our deals we're investing in, go to our website and sign up for our free ebook, 10 Reasons Mobile Home Parks Outperform Other Real Estate Investments. We won't spam you. We'll just keep you updated on the podcast and the deals we're working on. Now, back to the show. So with the MHP Pros, like what is like because I know you have it's a mastermind group. Also, I think there might be mentorship, or how does that work?
Right. So when I joined, I mentioned kind of my career history here, and when I joined the private equity side, legitimately on the front office side, what I was surprised was by the what I was surprised by was that there was no education really in the mobile home park space,
Yeah.
and there was no way to learn how to model mobile home parks. There wasn't really anything that discussed strategy um, or operations, like across the entire industry,
There's
except
literally like
for
one. There's like
Frank
one.
and Dave. You're
Yeah,
right,
exactly.
exactly. And that was not really geared to an institutional mind. That was more of a mom and pop operations kind of course, and it was a 2-day crash course. So I was like, there's no way that as a private equity professional, this is going to give me what I need. And so at that point, like 5 years ago, in my head, I was like, this is a something that the market needs, and I want to build it. And I don't know when I'm going to build it, but I'm going to build it, and I will. This will come out of my mind and into the marketplace at some point. And so, fast forward 4 years after that, I actually started to build this course. And that's how I came across Ryan. I was like, okay, who are the other educators in the space? And maybe would they be willing to partner with me as the institutional mind who can bring the institutional tools to the individual investor and private equity to the people
Yes.
and really help me discuss how to utilize those tools from an entrepreneurial standpoint. The two of us together is a potent combo, right? Because
Yeah.
now you're talking about someone who understands how the private equity folks think about these things and someone who's built an 85 site portfolio from scratch, or 85 park portfolio, I should say, from scratch. And so that was where the MHP Pros was born, right? It's taking both of these worlds and having them come together to help individual investors hone in on this asset type and cover everything from A through Z, not just, a 2-day crash course, but rather something they could go back to at every point during their entrepreneurial mobile home park journey and say, hey, how do I do this? And as soon as they have that thought, they type into the search bar in school, how do I do this? And 3 lessons come up in our school community about how that's done. And it's not just questions and answers, it's a full lesson plan with a step-by-step guide as to how to do that one thing. And that to me is super powerful. So
Awesome. Yeah, I kind of I knew about Frank and what is it? I always forget. It's Frank and Dave.
Mobile Home University.
Yeah, Mobile Home University, and I skipped that class. I didn't go, but my ego tells me like I'm I came from what I came from is a single family home property management company that grew to 55,000 homes, and it's something that's not supposed to happen, right? It was like single family homes can't scale, blah, blah, blah. And that's the way I feel. That's how I've been told about mobile home parks. And I think, well, if you can do it with single family homes, you can do it with mobile homes because more of a, there's more revenue when you buy a single family, a mobile home park. There's more revenue than like a single family home. So, anyways, that was kind of my background. But as I've learned that there's definitely some errors that I could have missed if I would have listened to somebody further ahead than me. So
yeah, and in our podcast, we
yeah.
talk about the importance of mentorship.
Yeah,
And frankly, even me coming from a private equity background and having invested these assets at that level, having Ryan as my mentor, right,
yeah.
as an entrepreneur, has been unbelievably beneficial. And by the way, like, while I have this institutional knowledge, I'm still gaining a lot of entrepreneurial knowledge at the same time. So what you're seeing here is you're talking about a baseline. Ryan started this process in 2015, 2016.
Mm-hmm.
So all the knowledge he's obtained from experience are baked into this course. Simultaneously, all of the new knowledge that I'm gaining whilst I build my portfolio with him as a mentor is being baked in at the same time. And so all the tools and technology that we have today that are also helping shape this industry are baked into an overall kind of pie here that you can really see the benefit of experience and new age technology and process improvement. Not to mention, you have me as the quote unquote private equity professional who's giving you the models and the tools that we used, kind of making them simpler for those individuals who aren't going to open a 50 tab model and fill out 10,000 inputs. In this case, you fill out 10 and it gives you quite a similar result. And so, that combination I think has been super powerful. The mentorship aspect of the MHP Pros, I can't speak highly enough about it. I would not be here within 6 months of starting my real estate investing career without Ryan.
Yeah.
And I can point to 10 mentees that we've had in the last 3 months who will say the exact same thing. And that's amazing, right? We have 3-month programs. One is a group mentorship program, which is twice a week, an hour and a half. The other is a 1v1 mentee program, which is, twice a week, an hour at a time. And all of our 1v1s have gotten parks under contract and are about to close effectively. And all of our group mentorship students either own parks already and are just in there to learn more about operations, or have just started and are just, miles away from where they were when they began.
Yeah.
And just seeing that transformation in our students and having, by the way, the testimonials to speak to it, that means the world to me. That means that this product works, that our thesis was actually true, and that we have raving fans now, right? In the form of our students. Things have been said like, this is the most approachable course in MHP or real estate investing in general. Oh, I've taken 7 other courses in this space, which I didn't even know there were 7 courses, and this is by far the best. Or, I can't believe that I found the cheat code to this industry. Like, these are the things that are being said. And I'm not saying that to be like a massive salesperson or pat myself on my back, but rather to say that within a year of starting this from an idea, it has become this powerful platform that people are speaking so highly of. And I'm very proud of that as an entrepreneur, because I put my blood, sweat, and tears working 12 to 16 hours a day in order to create the product.
The interesting part about that as well is that if you look at Ryan, I haven't really looked at Ryan's portfolio, but he was telling me that he actually doesn't have too many large parks, like institutional size type parks. And obviously the first park for most people would be a smaller park. And when you get into the smaller parks is when you start to realize you have to make sure that, like, when we meet with the owners, you can, through buying we bought in over 20 parks, you start to get to a point where you don't have to, talking to the owner is great, but it's like you can see through what is true and what's not, so like they'll be telling you stuff about the park and you're like, there's no way that's accurate. There's no way that's accurate. No, there's like, they'll tell you how there's like no delinquency. There's no, there's nothing wrong with the septic tanks. And it's like, you see like mobile homes with roofs caved in the park. And you're like,
everything's fine.
Yeah. If that roof is caved in, you're not going to fix a septic tank, because it's like, what is happening right now? And I joke about it with other operators, but it's like, yeah, I don't know if everything there's. And then there was this one time, just to go on a rant, we had this one operator. He actually had a piece of land, and I think he sold it for $10 million, and he paid $200,000 for it. And he told us, he's like, this place could be a crater in the ground, and I wouldn't care. And I was like, okay. And he had 2 parks, and they're completely vacant. And we're like, what is wrong with this place? And I think that there were other operators that knew about the park, that knew it was for sale, like off market. So we're like, why do we have it under contract and they don't? Like, these guys are bigger operators than us. And long story short, his mobile homes were like perfect inside. Like, he couldn't get us inside. Like, that's just the story. He was like, I can't get you inside. So what we did was we underwrote them as being terrible units. Then we bought the place, and then we got the units, and we're like, these things are like rent ready. And because he sold the park for 10, or he sold that piece of land for 10 million. He's like, I don't even want any more. He didn't want any more tenants. So he pretty much gave us this park with, like, I mean, we had to put a little bit of money into the units, but it was like, these units are in like almost perfect shape, but it was like the one scenario. And the funny part is they can never let you into the units. Oh, these units they're locked. I forgot my keys at home. And you're like, well, we're here on due diligence. Shouldn't we be able to get into the units? And but then there's been other scenarios where there's like no subfloors in any of the units. So
yeah, I mean, listen, in terms of diligence, people look past the home sometimes, like, oh, that's not my problem. They're tenant-owned homes. Age of homes is super important, especially if they're POH, obviously. But that is a massive line item. It's not just a massive line item if you don't have experience renovating mobile homes, but it is potentially a massive headache too, because if you had to refurb those homes, you're on site a lot. You can't trust your contractors all the time to give you accurate accounting of their hours, for instance. So it's a pain. You have to have a whole team that you put together for home refurb, and people look past that. I think it's like, oh, just buy a new home on financing. The math don't work a lot of the time. No. So make sure you're good at underwriting, and hopefully you have a nice cash surprise like you guys did, where the opposite was true. The homes were fantastic, and you underwrote tons of CapEx for home refurb. Not always the case. Not often, not the case at all. So
you learn in other ways too.
Yeah, 100%.
We bought this one park, and it was like within 2 months of closing on it, we found out we call the health department, check to see if there's any violations. They tell us no. which hindsight should have gotten in writing. They show up in week 2. They tell us, oh, you have too many RVs on site. So then like you can't have this many. It's not, they're too tight. And then we learned that we had to remove some RVs. And then also 2 months later, we have a $40,000 septic tank that's like exploding every time it overflows. And the drain field's exploding. And, that was something that we didn't take into consideration. And we were fairly new buying parks. And luckily we got around it. It's a great park. But at the same time, it was like $40,000 for a septic tank. And, now it's just like you just kind of consider there's going to be a lot of septic tank replacements generally. So,
yeah. And I think one of the fun parts about what you learned is that if you had hired a mentor for $15,000, you would have maybe saved that $40,000. So it's a net positive to have a mentor at the outset and tell you, hey, at least get a credit on the closing statement for that septic tank that's about to explode. Or, maybe you should get a zoning verification letter to find out about those RV sites. But you learn that, right? You learn that live, or you can learn it before you buy the park with someone holding your hand. And so that's why I think mentors are powerful. I don't like gurus, but I like mentors.
Yeah. So with that, since you brought up the price, that you think that you would hear 15, that's a lot. So if you think about when you're buying into a mobile home park and you say, I don't know, mobile home park between $500 and $1 million, you're like, if you put it as a line item, as a purchase price being new, just put it as a line item. Because in the past, we found some other operators that they know way more than us about mobile home parks. They very conservative underwriting. We paid them, we paid them, hey, help us underwrite this. We want to make sure we don't freaking shoot ourselves in the foot. And like, if you think about like the price, you're literally trying to improve the value by like $500,000 to this park. That number is just a line item on the closing statement is what I would say. Now, I mean, you might have to pay a different way, but if you just consider that a line item, or say your goal is to buy 2 or 3 parks, you could just have, you spread it out over that or whatever the case be. And I think that that's where the knowledge comes in. And I've sat with many operators with more experience than me, and that's a huge benefit for sure.
Yeah, and I think people make emotional decisions on pricing. A good example of this is, like, say you were going to take a wholesaling course and the course cost $1,000.
Yeah.
You could probably make $100,000 on a single wholesale deal.
Yeah.
So your mind is like, well, that's a lot of money. But if you just have conviction in yourself and go forward with that course and utilize what you learned to actually go do the thing, then you're going to make that back 100-fold, right? And what we try to deliver is at least, a 10x or 100x. In that case, it was 100x. We try and deliver at least 10x value on the price of our courses, the price of our mentorship programs. Like you said, it's a line item, but what else? It also is a tax deductible expense potentially for your property management company. And by the way, like, you're going to spend potentially $10,000 to $15,000 on a single deal in diligence costs. So why wouldn't you spend that same amount on your education and having someone tell you whether or not to buy something that could really cost you a lot? So there's 2 sides to the equation here. It's what you're not spending on your mistakes and the value that you get by building a portfolio, utilizing the skills we teach you, which is, it could be that you wholesale your first deal. It could be that you have an acquisition fee of 5% on your first deal because you found it. And now all of a sudden, you're going out to LP investors and you're collecting that 5% fee. Yeah. So you've already paid for the mentorship program. So you have to reframe your perspective as a consumer, I think, in understanding what the value that you're paying for is. And that can be very difficult as someone who came from the seat of a W-2 employee, understanding, I don't want to spend $15,000 on that. That's crazy. It feels like it is until you do the thing that you set out to do. So, we have a very long vetting process. I think we have 2 or 3 calls with Ryan and I before we accept anyone into our mentorship program. And the reason is because if we can't help you, we don't want to have you hire us because we don't think we can deliver that value. Yeah. And one of the main things, if you are considering mentorship, whether it's with us or with anybody, you have to be ready to take action in those months that you're paying for, because otherwise it truly is a sunk cost. So just be ready to take action. And I promise you at that point that you will find the value in these mentorship programs.
Yeah, I talked to Ryan about a month ago, and I actually fully intend on doing some mentorship with you guys. It's just that I think in the place that we're at right now, we're in the middle of like stabilization. So it's just rinse and repeat right now. But I definitely see, like, I talked to Ryan after our podcast for 10 minutes, and I feel like I'm like, oh my God, I feel so much smarter now.
He is unbelievable. And the dude has been speaking on podcasts for like 10 years now.
Yeah.
So he is very eloquent and he speaks so knowledgeably on these topics. And frankly, every time we get in a group mentorship call, you have, 12 eyes trained to the screen as he's talking through this or that. And he's a great storyteller. If anyone's listened to mobile home parks in real life, it's not just valuable information, but it's also like ear catching. Like you're like, oh wow, what's going to happen at the end of this story? He's a great storyteller, and that's so important. So yeah, I mean, he's taught me everything I know about entrepreneurial real estate investing, and he's done it in a fantastic way where he's also empowered me as an entrepreneur. It's half of this is coaching. Like, to be completely frank, mentorship is also about having someone pick you up when you're down. That's also the job of a business partner, as you're probably aware, Glenn. Ryan's been good at that from a mentorship standpoint and from a partnership standpoint. So I feel very blessed to have found him, and I hope he feels the same way.
Definitely. I actually have this one guy that helps me, and he actually doesn't have any property management experience, but he has like corporate background experience and processes and stuff like that. And I meet with him probably once every 2 weeks, and we go over like what I told him I was going to do. And like, he like holds me accountable is really what he's doing. But just having that person that's like going to tell you like, I don't want to go back to this person and tell him I didn't do what I said I was going to do.
The accountability aspect.
I can tell you that I almost make sure it's done. Like, I don't want to even be embarrassed unless I have a real good reason of why it's not done. It's like, this is embarrassing. And I look up to this person, and I don't want it to be like head down thinking I did, all the stuff that I was supposed to do it. I didn't do it. And you're like, well, I'm just wasting your time right now. So
we see that a lot. It's not that people aren't ready to take that next step, is that they don't have the accountability aspect of things. And they're a little bit afraid because there's those unknown unknowns that they're unaware of, right? We try to make those known unknowns so that they can start to learn about the unknowns and seek out, potential issues with a park that they wouldn't have otherwise thought to, like your story about zoning verification, right? It's a great example.
Well, it was great to have you. Where can people find you?
Absolutely. So you can find us on our podcast, the 30-Day Mobile Home Park, or you can find us, either of us, Ryan or I, on LinkedIn, Michael Pansolini. I'll send you over a full list of links people can click in the podcast description here or in the show notes to kind of find us online. But it was great talking to you, Glenn. I really appreciate you having me.
Awesome. Thanks for coming on.
Absolutely, man.
Thank you for listening to the Millionaire Journey podcast. Please rate, like, subscribe, leave a comment, and share with somebody you think would enjoy listening.